So I'm Theo Andrew, news editor, ETF Stream. And with me I have Tom Stevens, Global Co-Head of Capital Markets at JP Morgan Asset Management, and recently appointed Chair of the Investment Association ETF Committee. So Tom, thank you for joining us.
Thank you for having me.
So looking at the ETF market, what are the biggest trends you're seeing at the moment?
It's a good question. The two things that I think I'm really focusing on right now, active ETFs, one, very specifically at JP Morgan Asset Management. You see the trend, you see the headlines, you see the competition that is potentially coming to market in the UCITS space this year and next. We are very much focused on bringing the best of JP Morgan Asset Management, the active management that JP Morgan is known for, into the ETF wrapper. Whether that be the research enhanced products that have been very successful the last few years, and now a defined outcome, or income as the outcome, as we're phrasing it, where we launched product at the back end of 2023. So that has been very much a theme. You look at that theme. I think it's very much here to stay now in terms of flows. Last year, 23% of all flows globally into active ETFs. Yes, 5% of assets, but we see that trend continuing, and I think asset growth for that part of the market is going to continue to be in vogue. I think within that arena, fixed income is going to play a very, very important part. Many of the client base are used to being active within fixed income in different approaches, whether that's mutual fund or segregated mandate. But in terms of ETFs, not a lot of active approach to fixed income in ETFs, and I think that's going to change. Some of what we've done already with the research enhanced approach in Euro IG and Dollar IG, and now last year launching the first active global ag product as well. We think it makes a lot of sense to be active in fixed income. So I think those, active as a whole and active fixed income is going to continue to play out. The other item where we see a lot of growth, has been mentioned at the conference today, is retail and the uptake of retail investors using ETFs and kind of breaking down some of the challenges there. So you've seen the growth in Germany with ETF savings plans. You've seen growth in Spain despite some of the hurdles there, and I think the UK is starting to get its act together there as well. Some of the changes from a regulatory point of view with ISA and fractional dealing, which is very positive, but there's more to come from a platform point of view, from an access point of view, where ETFs are only going to benefit, I think.
All very exciting stuff. And sticking with actives for a moment, are there any kind of trading nuances that investors need to be aware of when trading active ETFs over passive ETFs?
So very much by design, Theo, we've made our ETFs and our processes look and feel as much like indexed ETFs, because that's what people are used to. So the 20 authorized participants that we work with are very much used to index products. That's what's been the prevalent in the market to date. And now with active ETFs, the files that we produce daily, the valuation files, the portfolio composition files, they look and feel exactly like index products. So they've very much got used to our approach. We've worked very closely with our portfolio managers and our authorized participants to educate them just as much as our clients, so that they feel comfortable pricing and trading as much as our clients feel comfortable investing. And that is a perfect marriage there, because you have to be able to have that liquidity. If our APs are comfortable, our clients are comfortable, then that's going to be a very good outcome for everybody.
And following on from that, what's the future of sort of ETF trading for you in Europe? What does that look like from your perspective?
So in recent years, the rise of RFQ has been very prevalent. However, what we're starting to see in terms of banking provision, especially in ETF fair value algorithms or different approaches to trading ETFs, which embed and an algorithm understands that it's an ETF, so it thinks about it a little bit differently. It can deconstruct what the ETF is made up of, and it gives our buy-side dealers some comfort. If you think about it like going 10-pin bowling, but with the child pin lanes up, right? You've got barriers there to protect you. You're never going to sell too low, and you're never going to buy too high, because it's got that fair value embedded into it. So I think that's an important evolution. We're starting to see it from a handful of banks and broker-dealers now, and we're starting to see take-up. JP Morgan, for example, has been one of the main protagonists there in terms of testing a number of these portfolios on ETF flows that goes through JP Morgan Asset Management's dealing desk, and that's been very positive. So I think that will allow, in time, maybe an equality in terms of trading on exchange and trading block, OTC, RFQ, and using RFQ for the right reasons rather than smaller tickets, which should all be blended into the lit markets, and flow will beget flow there. And I think it will help the market grow. I think it will help retail flow that will have access to order books, but not necessarily RFQ. And I think that's an important step and change for the UCITS ETF market.
Yeah, good stuff. And then finally, coming to your new role as chair of the Investment Association's ETF committee, what are kind of your focuses going forward in that? What are the committee focusing on for the future?
So it's an exciting new journey after being the deputy for the last 4 years. Being able to think about it now with Rajat Tiwari from BlackRock. We've got our 3 pillars under trading and operations, regulation and distribution. So those are the 3 key areas that we're focusing on. Within those pillars, there are a number of topics, from trading and operations that will be, the consolidated tape, T+1, everything that is occurring very soon in the US, and also what that means for the UK and the EU. From a regulatory point of view, we very much want to make sure we're joined up with IFAMA, with Irish funds, to make sure that the ETF voice within the UCITS industry is heard as one. And it's a fabulous opportunity to work with a number of colleagues in the industry, whether that's distribution, ETF capital markets, product people, and bringing the best minds at it, and actually you're delivering upon something.
Yeah, good stuff. Tom, thank you very much. That was brilliant. Cheers.
Thank you, Theo.